Cadence works with some of the most influential technology companies in the world, including Nvidia, AMD, Intel, Qualcomm, Broadcom, Apple, TSMC, and Samsung. These companies may operate in different markets, but they all depend on one thing: advanced semiconductor design. Nvidia develops AI accelerators that power modern data centers. AMD builds high-performance processors for cloud computing and personal computers. Intel designs and manufactures a wide range of chips used across industries. Qualcomm specializes in mobile and wireless technologies. Broadcom provides critical networking and infrastructure solutions. Apple develops custom silicon that powers its ecosystem of devices. Meanwhile, TSMC and Samsung manufacture many of the world's most advanced semiconductors. Despite their different roles, all of them are pushing the limits of computing performance, energy efficiency, and chip complexity. As these technological demands increase, the engineering challenges become significantly harder to solve. This places Cadence at the center of a global ecosystem where innovation is happening simultaneously across multiple industries. The company's success is not tied to a single product, a single customer, or a single technology trend. Instead, Cadence benefits from supporting many of the companies that are building the next generation of computing. And that is what makes its position so unique. While most people only see the final products, Cadence operates quietly behind the scenes, enabling many of the technologies that define the modern digital world. Every semiconductor starts as an idea, but turning that idea into a physical chip is an extraordinarily complex process. Modern AI chips contain tens of billions of transistors, all working together to perform billions of calculations every second. At this level of complexity, engineers cannot simply create a design and send it to a factory. Every connection, every signal path, and every component must be carefully planned and tested long before manufacturing begins. To do that, engineers first create a digital version of the chip and run thousands of simulations. They analyze how data moves through the system, how much power the chip will consume, how much heat it will generate, and whether every part can operate reliably under real-world conditions. This process can take months, and in some cases, several years. Only after countless tests and refinements can a design be considered ready for production. Because once manufacturing starts, fixing a mistake becomes extremely expensive. In the semiconductor industry, prevention is far cheaper than correction. That's why chip design has become one of the most important stages in the entire technology supply chain. Before a chip can power an AI model, a smartphone, or a data center, it must first prove that it can work perfectly on a computer screen. Because in today's world, the factory is no longer the beginning of semiconductor production. The design process is. Cadence generates its revenue by providing software and intellectual property that engineers use to design complex semiconductor systems. Its largest business is electronic design automation, or EDA software. These tools help engineers create chip architectures, verify circuit designs, simulate performance, and identify potential issues before a chip enters production. As semiconductors become more advanced, these tasks have become impossible to manage manually. Cadence also provides semiconductor intellectual property, or IP, which consists of pre-designed components that customers can integrate directly into their own chips. Instead of building every function from scratch, engineers can use these ready-made building blocks to accelerate development. Beyond semiconductors, Cadence offers system analysis software that helps engineers simulate how products will behave in real-world environments. This includes analyzing heat distribution, airflow, power consumption, and signal performance across complex systems. The company has also expanded into digital twin technology, allowing customers to create virtual replicas of data centers, industrial facilities, and other large-scale infrastructures. Today, Cadence serves multiple stages of the engineering process, from the earliest chip designs to the simulation of entire systems. Its business model is built around providing the tools that engineers need to transform ideas into products that can be manufactured and deployed at scale. Building a modern semiconductor is not a short-term project. It often takes several years and involves thousands of engineers working across multiple teams and locations. Throughout that process, every design file, simulation model, and verification procedure is built around a specific software environment. Changing that environment in the middle of development would create significant disruption. Engineers would have to learn new tools, adapt existing workflows, and repeat extensive validation processes to ensure the design still works as intended. This would consume valuable time and resources. For companies developing advanced chips, time is one of the most important competitive advantages. Missing a launch window by just a few months can allow competitors to gain market share or delay the deployment of new technologies. As a result, companies are extremely cautious about making changes to the systems they already trust. The longer they use a platform, the more integrated it becomes with their engineering processes. Over time, replacing that platform becomes increasingly difficult and expensive. For many customers, the cost of switching is simply far greater than the potential benefit of moving to another provider. And that is precisely what makes Cadence's position so powerful. Its software is not something customers use occasionally. It is something they build their entire development process around. Cadence works with some of the most influential technology companies in the world, including Nvidia, AMD, Intel, Qualcomm, Broadcom, Apple, TSMC, and Samsung. These companies may operate in different markets, but they all depend on one thing: advanced semiconductor design. Nvidia develops AI accelerators that power modern data centers. AMD builds high-performance processors for cloud computing and personal computers. Intel designs and manufactures a wide range of chips used across industries. Qualcomm specializes in mobile and wireless technologies. Broadcom provides critical networking and infrastructure solutions. Apple develops custom silicon that powers its ecosystem of devices. Meanwhile, TSMC and Samsung manufacture many of the world's most advanced semiconductors. Despite their different roles, all of them are pushing the limits of computing performance, energy efficiency, and chip complexity. As these technological demands increase, the engineering challenges become significantly harder to solve. This places Cadence at the center of a global ecosystem where innovation is happening simultaneously across multiple industries. The company's success is not tied to a single product, a single customer, or a single technology trend. Instead, Cadence benefits from supporting many of the companies that are building the next generation of computing. And that is what makes its position so unique. While most people only see the final products, Cadence operates quietly behind the scenes, enabling many of the technologies that define the modern digital world. Designing modern semiconductors requires engineers to evaluate countless variables at every stage of development. They must test different layouts, optimize performance, manage power consumption, and identify potential issues before manufacturing begins. These tasks can consume a significant amount of time. Artificial intelligence is helping engineers perform this work more efficiently. Instead of manually analyzing every possible scenario, AI can process large amounts of design data and quickly suggest areas for improvement. It can also compare multiple design alternatives at the same time, helping engineers identify more effective solutions faster. This allows engineers to spend less time on repetitive analysis and more time making critical design decisions. As semiconductor designs become increasingly complex, this type of assistance is becoming more valuable. Cadence has integrated AI into its software so engineers can accelerate the design process while maintaining accuracy and reliability. Rather than replacing engineers, AI is becoming a tool that helps them work smarter and make better decisions throughout the development process. Designing advanced semiconductors requires engineers to make thousands of decisions throughout the development process. They must compare different layouts, optimize performance, manage power consumption, and identify potential issues before manufacturing begins. Many of these tasks are repetitive and require analyzing large amounts of data. Artificial intelligence is helping engineers complete this work more efficiently. AI can quickly analyze design data, detect patterns, and evaluate multiple alternatives at the same time. This allows engineers to identify better solutions in less time. Instead of spending hours reviewing every possibility manually, they can focus on making critical design decisions. AI is not replacing engineers. It is helping them work faster, reduce repetitive tasks, and improve overall productivity. As semiconductor designs become more complex, this collaboration between engineers and AI is becoming an increasingly important part of the development process. Cadence's competitive position is built on 4 layers of advantage that strengthen one another over time. The first is technology leadership. Developing advanced engineering software requires decades of expertise, continuous research, and significant investment. The second is deep integration within customers' development processes. Its tools become part of how engineers design, test, and validate complex systems every day. The third is an established engineering ecosystem. Over many years, engineers have developed extensive experience and best practices around the platform. The fourth is long-term customer partnerships. Semiconductor development is an ongoing process, which naturally creates relationships that can last for many years. Individually, each of these advantages is valuable. Together, they create a durable competitive position that is difficult for competitors to replicate. Rather than relying on a single strength, Cadence has built multiple layers of advantage that continue to reinforce one another over time. Most of Cadence's revenue comes from subscription and licensing agreements that are renewed over multiple years. Unlike businesses that depend heavily on one-time sales, this model creates a more predictable stream of income. Because these agreements extend over long periods, Cadence has greater visibility into future revenue. This allows the company to plan its investments, allocate resources, and manage its operations with more confidence. The model also helps reduce short-term fluctuations that many technology companies experience from quarter to quarter. As a result, revenue and cash flow tend to be more consistent over time. That consistency gives Cadence a stable financial foundation and allows the company to continue investing in research, product development, and future innovation. Rather than relying on unpredictable sales cycles, Cadence operates with a business model designed to generate steady and repeatable results. Cadence has built a business that improves across several areas at the same time. Over the years, the company has consistently increased its revenue, expanded its profit margins, and generated more free cash flow. This combination allows the business to compound over long periods. The cash it generates can be reinvested into new technologies, product improvements, and future innovation. Those investments then help drive the next stage of growth. What makes this process powerful is its consistency. Cadence does not rely on a single breakthrough product or short-term trends. Instead, it has built a system that repeatedly turns today's success into future growth. That is why Cadence can be viewed as a machine that keeps compounding year after year. Few companies can consistently generate high returns on the capital they invest. This matters because a great business is not defined by how much money it makes, but by how efficiently it turns investment into profit. Cadence has demonstrated this ability for many years. The company does not need to build expensive factories or constantly deploy massive amounts of capital to expand its business. Instead, much of its investment goes into software development, research, and engineering talent. When those investments produce profitable products, Cadence can reinvest the returns and repeat the process again. This creates an efficient cycle of growth that is difficult to sustain over long periods. And that is why high returns on capital are one of the strongest indicators of a durable compounder. Unlike many companies in the semiconductor industry, Cadence does not depend on manufacturing physical products. Its primary asset is engineering expertise. The company packages decades of accumulated knowledge into software that engineers can use across countless projects. Because software can be deployed repeatedly without building additional factories, the business can scale efficiently as demand grows. In essence, Cadence is monetizing expertise rather than producing hardware. And that ability to transform knowledge into a scalable product is one of the key reasons behind its long-term performance. No business is without risk, and Cadence is no exception. One of the biggest risks is a slowdown in semiconductor spending. If customers delay new projects or reduce investment, software demand can temporarily weaken. Another risk is technological disruption. The semiconductor industry evolves rapidly, and Cadence must continuously innovate to remain competitive. Competition is also an important factor. Although the barriers to entry are high, established rivals continue to invest heavily in their own capabilities. In addition, some of Cadence's largest customers represent a significant portion of its business. Changes in their spending priorities could affect short-term results. These risks do not necessarily weaken the investment case. However, they remind investors that even exceptional businesses require continuous execution to maintain their competitive position over time. Valuing a company like Cadence is not about finding a single target price. The future is uncertain, so it is more useful to think in terms of scenarios. Under a conservative assumption, Cadence is worth around $246 per share. This scenario assumes slower growth and more cautious market expectations. Using historical assumptions, the fair value is approximately $281 per share. This reflects a continuation of the company's long-term execution and business fundamentals. Under an optimistic scenario, the valuation could reach $420 per share. This assumes that AI adoption continues to accelerate and Cadence remains one of the key enablers behind next-generation semiconductor development. No valuation should be treated as a guarantee. Instead, these ranges can serve as a framework for understanding the relationship between price, growth expectations, and long-term business performance. For long-term investors, the most important question is not whether the stock can move higher next month. The more important question is whether Cadence can continue compounding its business over the next decade. Because if the business keeps compounding, valuation will eventually follow. Many investors are naturally drawn to companies that grow at extraordinary speeds. But in long-term investing, consistency often matters more than acceleration. Cadence did not become successful overnight. The company spent decades building technology, strengthening customer relationships, and continuously improving its products. Its progress may appear slow when viewed year by year. But those small improvements have accumulated over time and produced exceptional results. This is one of the reasons Cadence has outperformed many well-known technology companies over long periods. The lesson is simple. In investing, faster is not always better. Sometimes, the businesses that quietly execute, reinvest consistently, and compound year after year end up creating the greatest value. And Cadence is a powerful example of why slow is often faster. Cadence is a reminder that some of the best businesses are not always the most visible. The company does not manufacture chips, build data centers, or create consumer products. Instead, it provides the tools that help make those innovations possible. Over many years, Cadence has built a business centered on expertise, discipline, and continuous improvement. Its success has not been driven by short-term excitement, but by consistent execution over long periods of time. And perhaps that is the biggest lesson investors can take away from this company. Great businesses do not always grow in the spotlight. Sometimes, they quietly create value year after year while enabling entire industries to move forward. And Cadence Design Systems is a powerful example of how long-term compounding can turn a hidden company into an extraordinary one. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching, and if you enjoyed this analysis, don't forget to like, subscribe, and share your thoughts in the comments below.